All right. So today, here our ground rules remain the same. All participants to remain muted while the class is going on. You raise your hand if you need to stop for clarification. You can also type your question using the chat box. And also, more importantly, ensure that whenever you are speaking, your background is clear before you unmute to speak. I'm sure we've all complied to this, from inception, and today is not going to be different. All right, thank you very much. So today we are going to go into a very popular concept in trading that is called trading with indicators. Now, I know a lot of us probably wonder from beginning of this class to date that this is a chart, right? And for some reason, you don't understand why the chart left this point and came to this point. You don't understand why the chart did all this movement to the upside and then it got here, it started coming down. Okay, so there are indicators. Okay, there are indicators that allow us or that enables us to know that this market is approaching a U-turn, or this market is approaching a place where it's going to do a U-turn. Okay, and it's very critical, it's very important that we all understand, why we use indicator and why we need to apply them to our trading. Okay, a lot of the time, many people use this indicator, but even at that, they still are not profitable. Now, the only difference is that they probably are not using the indicator correctly. If you use the indicator correctly, you will profit from this market. But if you use it wrongly, and if you solely depend on the indicator 100%, then there's a chance that you may lose, most of your trade that you are going to be taking. So indicators they are not just standalone. You have to combine them with what we call price action. Okay, when you look at this chart, what the chart is showing you is what we call price action. What is price action? It means the action of price. That is that thing that price is doing. And like I tell you, in any of your trading, look at this line that is running across the screen. This is the actual price today, right now, of this pair, of this currency pair. This is the actual price, 157.445. The interpretation of this is that this currency is USD JPY. Okay. Um, who is doing that? I need to, okay. So the implication of this is that for USD JPY, right, you need this value, of JPY to buy 1 USD. Okay. So in forex trading, there are two currencies that you trade at the same time. You have the base currency and the quote currency. So you need a particular volume of the quote currency to buy the base currency. So the base currency is usually higher, okay, in terms of, description. The base currency is usually higher. So if you say USD JPY, so I need more of JPY to buy USD, okay? I think it will be better if I use our Naira to do it so that it will be clearer to you. So you can say Control M, Control M will give me this. Then I scroll to NGN, USD NGN, USD. Okay, these people don't have NGN. Let me pull it from another chart. Okay, they have NGN. Yeah, so I pull this up. USD NGN. So this is USD NGN. Okay. So what it means, your base currency is United States dollar and your quote currency is Nigerian naira. So at the moment, I need 1,625 naira and this fraction to buy $1. Can you see that? So this is the worth of $1 at the moment. Is worth 1,625 naira. Okay. So anytime you see two currencies, that are quoted side by side, always have it in mind or know that you need more of the quote currency. So these are different currencies. So you have AUD, USD, Euro USD. So any of the, if I change to AUD, USD, it means I need this value of US dollar to buy the Australian dollar. Okay. So you can see that the US dollar is higher than the Australian dollar. So what I need is 0.66822 of USD to get one AUD. Okay. So the same thing, if you go to USD card, you are going to see the same thing. If you go to USD, NZD, USD, you're going to see the same thing. So it's critical that you understand this, right? So the indicator can suggest for you that trader, you are approaching a zone where there will be either more buyers than seller, or you have more sellers than buyer. So most of the indicator that does that are like the stop reverse indicators. Okay. So we are going to delve into. I have two presentations and they are long. I don't know how we're going to manage it within this time frame that we have, but let's see how well we can do. But it's my wish that we're able to complete this this slide because they are much. Let's see. So trading with indicators one and trading with indicators two. Then we're going to do some things outside of trading with indicators. So let's start with trading with indicators one. So this one has more of explanation to do. Okay. Okay, so let's go. Confirm you can see my screen. So let's go. Something is wrong. Let's see. Wait a moment. Something is wrong here. This is not Forex time. This is markets. Okay. Scroll. Sure. So let me just take everything once. Not sure. Okay. All right, so let's go back one step. Okay, so trading with indicators. So this is just indicators basics. So indicators are technical, they are technical indicators with mathematical calculation that are embedded, inside them, and they can be applied to currencies past pattern like price, volume, or even another indicator. So there are sometimes that will overlay indicator on top of indicator. Okay. Then indicators can analyze any part of the fundamentals, like the announcement, the species, the earnings, and they can also be used by traders, both for long-term investors and even for short-term investor. Uh, uh, both long-term and short-term, they actually find indicators valuable. Indicators are used to alert the trader about a trend or predict the initial direction or future price. Then it can also confirm the technical analysis. So you can analyze your chart and maybe by your price action, and you say, okay, after your analysis, you want to be sure if your analysis is correct, then you can put in an indicator to be able to confirm if that analysis that you have done is actually correct. So we have a leading, lagging, and confirming indicators. So lagging indicator are indicators that, that refers to the past, okay, the past action of price, while leading indicators are the ones that tend to point you in the future direction of price. A lot of moving averages are, are lagging indicators, but when you talk about oscillators, they like something like stochastic, it tends to tell you where the market is going to go even before the market goes there. So they are leading indicators. Okay. Um, so, like I said, the lagging ones are those that follow price. They give you a signal after the trend or the reversal has started. They won't be able to tell you that the trend is going to start because they actually follow price. Okay, and they can help you to determine trends. One of the most common lagging indicator is the moving average. Moving average is, in fact, moving average is the Please confirm you can hear me.
Yes.
Okay.
Yes, we can.
Okay, sorry. Let me continue. I just talked about the lagging indicator, and I said before the network went off, I was saying that the moving average is the most popular of all. In fact, is the most popular indicator in the world. Okay, and one of the reasons why it's the most popular is because if you take a closer look at every indicator you will see in the market, you will see that there is a component of moving average inside of them. In fact, all the indicators that people create, they actually create them with moving average. That's just the truth. Okay. But now somebody will tell you that moving average is lagging, and because of that, you may not like moving average. But funny enough, that indicator that you love, that you think is displaying for you in a different way other than the moving average, is still actually moving average. Okay, it's just a redesigned moving average. Let me put it that way. Okay, just to change the appearance, It's no longer showing like the line that you know, but in reality, it's actually moving average. And like I said, the leading indicators are the ones that gives you, a signal of what is about to happen in the market. So it tells you the market is going to buy even when the market has not started buying. So they kind of help you to enter the market early, even before the market will start its reaction of, buying or selling. So they try to predict price by using a shorter period in their calculation, thereby leading the price movement. Some popular leading indicators are the stochastic oscillator, the MACD, we call it the moving average convergence divergence, MACD, the relative strength index, RSI, the momentum. We have a lot of them, right? The channeling index. So when you download your MT4, a couple of indicators will come with your MT4 by default. All those indicators, all of them, they are all in the list of both leading and lagging indicators. Okay. So indicators can be used as a tool for confirmation. So they use to confirm signal from other indicators, like volume and volatility indicator can be used to confirm that price and momentum are slowing down. You can actually see if you Okay, no problem. As we progress, we'll see. So there are indicators that shows you like strength. Okay. So when you see that the strength is dying down, okay, oh, the strength to the up is dying down, so the market is probably going to, make a change to the other direction. So things like that. So something like the average directional index, the ADS, is one of such indicator, and I'll also explain that in the second slide. So what does the indicator do? They measure trend, they measure momentum, they measure volatility, and they also measure volume. These are the four key things that indicators measure for you. Trend actually shows you direction, and what they normally do, the trending indicator, they break the market into two zones. They split the market into two. So if the market or the candlestick are above the indicator, it tells you that the market is in a buy zone, and when it's below the indicator, it tells you the market is in the sell zone. So that's what moving average also basically does. So it split the market into the sell zone and the buy zone for you. So what you want to do, even though you are going to see a sell signal in the buy zone, it is advisable not to take it. You have to wait to see a buy signal in the buy zone in order for your trade to, move very well. Okay. So the major trend, the major momentum. So momentum has to do with, how strong the market is moving to that direction is going to. When you see that the volume of transactions that are happening in the market is tilting to the buy side. When that volume is high, one thing you use to know is that the candlesticks that will be forming to the buy side, you'll see the candlestick will be bigger in size as compared to those ones that are forming to go to the sell side. So that's one thing used to identify, momentum. So there are candlestick that we call momentum candlestick because of the size of the candle. Okay, so it can be used to analyze volume. It can calculate. It is calculated by comparing the current closing price to the previous closing price. Like I said, the size of the candle, is usually bigger. Typically, a volume indicator appear as a line below a price chart that oscillate as movement changes. Then when there's divergence between price and momentum, it can signal a change in future prices. Okay. Um, so indicators like stochastic, commodity channel index, CCI, the relative strength index, they measure more of the recent trading price strength, speed, and a magnitude of whatever move they are making. So they help you to determine if the market is actually going to change direction or the market is going to maintain, its current direction. These are some of the things that the indicator will help you to do. in terms of volatility, they measure the rate of price movement, okay? Regardless of direction, it doesn't matter the direction. They measure the rate of price movement. So this is generally based on a change in the highest and the lowest historical prices, and they provide useful information about the range of buying and selling that takes place in any market. And lastly, they help the traders to determine points where market may change direction. So all these things that we're talking about now is actually a collection of how well you have understand your price action, right? Because in all this, you cannot do it without price action. You still have to rely on price action to be able to do some of these things. Okay. Okay. Bollinger Band also is one of those indicators that help you to measure the highness or the lowness of price related to normal trading ranges. So it is if you see the Bollinger Band is so there are three moving averages that makes up the Bollinger Band. Okay, so you have the upper band, you have the lower band, and then you have the mid line. Okay, that midline is separate the market into buy and sell. So when prices are between the upper band and the middle line, the market will be in a buy mode. And when prices are between the upper band, the middle line, and lower band, the market will be in a sell mode. Okay, it uses those three lines are actually like standard deviation. There's a lot of calculation and computation behind indicators, but you may not see that. But one thing I will also teach you tonight is how you can adjust the indicator, to give you what you want to see. Okay, and what you want to see is what the market is doing in effect. Okay, so volume indicators, they tell you volume indicators are very powerful because every other indicator sometimes we have to rely on volume. An indicator can tell you that the market is going to buy, but the volume of the market is to the downside. So that buy will be of no effect because the market will actually gravitate towards the direction with the highest volume. Okay, everything you are doing in the market, no matter how beautiful a signal may look, if it's not in the direction where volume is heading to, it's just going to be waste of time. You might end up taking that trade and you lose that trade because the volume will always prevail. The volume will always prevail. The volume will actually help you to know whether the trend is strong or the trend is weak. Okay, the volume indicator will help you to determine that. So volume indicator, they measure the strength of a trend or confirm a trading direction based on some form of average or smoothing of raw volumes. Something like the tracking oscillator, the unbalanced volume, call it OBV, then the volume rate of change. These are indicators that that you can use as volume. Another thing can also give you volume is something like the MACD. You can also use the MACD as a volume indicator. There are a whole lot of other volume indicator like the solar wind joy. I prefer the solar wind joy because it tends to be more accurate. And whenever the solar wind joy is fully confirmed, it takes a long time and for it to actually change direction. And every time it does that, it will actually keep you in the trade for a long time. Okay. Um, let me just kind of show you how that looks like. So when I say solar wind joy, if I come here to this chart, I just want to give you an example. So if I say solar wind joy, okay. Okay, so it's an histogram, right? So if I just apply it to the chart, this is how it looks like. Okay. I don't know if you can see, I don't know if you can see this. So this is how it looks like. So when this guy is red, it tells you that the market is selling. Okay. It tells you this market is selling. Now, even if you have a buy in this market, because this guy is saying that the market is selling, that buy will be short-lived. That buy will not last for too long because this volume the market must realize the entire length or the entire move of that volume before it changes direction. Okay. So this is just one of them. So when you see this green, you see the market will be buying. When you see the red, the market will be selling. Okay. So even if you don't know how to trade Forex, you don't know anything about Forex, the only thing you know is that when this line turns to green, look for a buy. When this line turns to red, look for a sell. This is why I said this class is more like a standalone class. Okay, today. It don't necessarily mean that you need to have, know everything that we have done from the beginning of this class in order for you to be able to use this. The only beautiful thing it does for you is that with the previous knowledge, if I want to enter this market sell, I will take my trade from here. Let me give you an example. I'll take my trade from here. This I will sell from. Now, when I sell from here and put my stop loss, say somewhere here, this market will never come back here before it's going to make all this move to the downside. Okay. Now, all this move that's coming to the downside, this is like 500 and something pips in about 19 days. Okay. There is a place that somebody will come and enter this trade, and this market will intimidate the person even out of the trade. Okay, why? Because the person did not apply price action, in making his decision. Somebody can jump into this market here. Somebody can jump into this market here. Okay, and when the market does this pullback like this, the person will be scared because it will be his trade is going to be on a loss. Okay, and if you don't have enough equity to hold that loss, you will be out of the market and the market will still go your way. That's one of the biggest problem in trading. Okay, where people will enter the market. After entering the market, intimidate them out of the trade, and then the market still goes their way. Okay, those are some of the things you want to guide against, also like by using indicator. Now, this is the default setting of this indicator. Okay, I'm bringing this one out because of volume, because I mentioned volume. Okay, this is the default setting. I can further smoothen this setting. I can change it to something that works better for me. I can change it to something that flips faster. I can change it to something that flips slower. It all depends on what I want to see. So when you right click on this indicator and click properties, it gives you features that you can adjust. So this period that you are seeing is actually telling you that this is a moving average. This indicator is a moving average. Okay. So I can change this period. I can come here and say I make this period 50 and I apply. You see, it's going to change. Are you seeing that? It's smoothing it even further. You see, all those fluctuations that were there, you no longer see them. Okay. And if I go another step further by changing it to say 100, it's smoothing it even further for me. Okay. So what this thing is actually telling me is telling me this is 100 moving average. Now, if you look at this 100 moving average, look at where it flips to red here. And then the market, after flipping to red, the market pulls back. You want to start selling after the market has flipped. So volume has flipped down, that the market is going to sell. Don't hurry and rush into that sell, because if you rush into that sell, let's say the market flip down like this, and you rush into the sell. When the market is doing this pullback, you will be at a loss. Allow the market to pull back first. When the market finishes pullback, then you can now join the continuation. When you join the continuation, you can now stay on that continuation until this whole volume is fully manifested. Okay, the same thing for this, the same thing for this, the same thing for this buy. You see this long buy, the market flips up, and then the market pulls back. Let me move this. The market flips up. When the market flips up, the market moves forward. Then after I move forward, the market pulls back like this. Okay. Now when you put this, after the market flips up and the market is pulling back, once you put your trend line across the eye, a break of that trend line is your buy. You enter this buy and you stay the length of all this volume moving to. This is guiding you to the upside. It's just guiding you to the upside. You don't need to do anything. This guy is telling you that the market is still buying, the market is still buying, it's still buying, it's still buying. So you don't need to do anything until you notice that the market changes direction. So one thing you want to do too is you can say, okay, where was the low before this market flip off? So I take that low as my A, and when it flips up and pull back, I take that as my B, and then I spread Fibonacci between the A and the B, and this is a very shallow retracement. If I didn't even get to 23.6, this is just 14, okay? So meaning that this market must go at the minimum, it must get to 161.8. So if you pull this, can you see how the market run, hit 161.8, okay? From where we say buy the market, which is somewhere here, okay, to 161.8. Let me see how many pips is that. So it goes. This is the first place where they hit the 161.8. That's about 820 pips in 133 days. Okay, so this is how you want the indicator to guide you. So now you have set this. If you have set this as if you have decided that this is what you want to use, right? You can set this and you leave it. And then you start looking for trade opportunities in the direction of the volume. That's what you want to do. You want to look for trade opportunities in the direction of the volume. So this is just for solar wind joy. There are a whole lot of other indicators that you can use to do the same thing. Like I said, the MACD can also be used. Okay. So what are the different type of indicators? We have general indicator, we have moving average, oscillators, band, index, regression. So there are a whole lot of them. General indicators are those that are used to measure specific movement in the market and visually monitor what's happening, okay? So encapsulation, standard deviation, highest high, lowest low, these are things that tell you, what is actually happening. These are generic indicators, right? Then moving average basically divide the market into buy zone and sell zone, but moving average is a trend indicator. Okay, so two popular among them is a simple moving average. We also have the exponential moving average, and we have the T3 Tyson. This T3 Tyson is applicable to some trading platform, not all trading platform. Okay, but most popular is the SMA and EMA. Anytime you see EMA, it means exponential moving average, and then simple moving average. So you can use any of them. There's just a little difference, in their mode of appearance, but basically they do the same thing. Okay, oscillators measure momentum and price movement, and they are used to verify or agreement or disagree between the two. So oscillators are used sometimes as filters. Why do I say filter? So you have a trend, the market is going to trend, which side the market is going to go, the upside. Then you want your indicator. 1 minute, please. Okay, so then you also have, so you have RSI as an indicator, and we have stochastic as an indicator. But then there's another indicator that is called stochastic RSI. So it's a combination of both RSI and stochastic as one indicator. Okay. Then MACD, very popular, moving average divergence convergence. And so by knowledge, you understand that when the MACD histogram is above the zero line, it means the market is buying. And when it's below the zero line, it means the market is selling. But sometimes you notice that the MACD has already started separating itself from the signal line before it ever crosses above the zero line. So the early buy actually starts when MACD start pulling back, when the histogram start pulling back from the signal line. Okay, you get to see that when we open the MACD. bands, I talked about Bollinger Band. So apart from the fact that we use it as a trending indicator, it can also be used during high volatility, when there's going to be high volatility in the market. It can also be used because before you get that high volatility, what the Bollinger Band will do is to contract. 1 minute ago. Who is there? So before that major volatility will happen, which usually could be a fundamental announcement, the Bollinger Band will tend to contract. Okay, will contract. Then that contraction is waiting for the massive move that is going to happen, because of the high volatility the market is going to experience. And when that volatility comes, the Bollinger Band will break out into the north, will break out to the north or break out to the south, depending on the direction that the market wants to go. And it's after that breakout that you as a trader want to take the trade, because you may not be able to tell which direction is going to break out to, why that market is creating that range. Kettner channel 2 does similar thing like the MACD. Allow to go. Okay, so these are just some of the list of indicators. Then regression is one of the many indicators that combine technical analysis with quantitative analysis. So regression indicators, they are used for trend. If you see a regression indicator, they come in the form of 2 or 3 parallel lines. Most time 2. So those 2 parallel lines, they create like a range where the market is bouncing from. Okay, so the market bounce from the up, it goes to the down, bounce from the down, it goes to the up. So it's all a function of whether the market is exhausting when it gets to that lower band or that lower level, or exhausting when it gets to the higher level. So it's just but then the regression, when you see the indicator, you will know that, okay, price has entered into this range. Then you can now start taking advantage of when the market hits the maximum high or the lowest low, to be able to profit from that move. Okay. So here are some of the best practices and tips for indicators usage, right? So now, if you're covering 5 or more indicators at a time is inefficient, focus on 2 or 3 indicators. Okay, so you might there. So if I open that my MT4 again, you will see that right here, there are a lot of indicators, right? But you see from here, these indicators where you have trend, oscillators, volume, Williams, okay, all the way to market. So these are things that comes by default with the MT4. Okay, so let me look at that new one that we downloaded, this one. So if you look at this is MT5, right? So if I go Control N, so right here, I've not installed any third indicator on this. Okay, so okay, yeah, I put True TL. So okay, let me take it up to True TL. Everything up to True TL, they came with the installation of the MT4. This is so from here up, they come by default. While here down are the ones that I install myself. Okay, so now you see that there are so many of these ones, right? And this is just small. Everything you see here is from one vendor. You can see true TL. So this is, I've just only put one vendor's indicator. Okay, so if you come back to the other MT4 platform, I have a whole lot of indicators here. So now this is much, right? So now what we are saying is, if you think, yes, you can know all of them. Trust me, I can tell you I know all these indicators, right? I know what they do, the way they work and everything. But then we are saying that if dealing with so many of them at a time is going to confuse you, stick to one or stick to two or maximum three that will not disturb your focus. Avoid using indicators that generate the same signal. Always choose indicators that complement each other. Using a simple moving average and an exponential moving average with similar settings won't provide additional information. So just take one. So if I say I'm using SMA 15 and I'm also at the same time using EMA 15, maybe the difference is going to give to me on the chart is will not make too much of a difference. So instead of using those two, why not use one? Okay, so that your chart will not become clumsy. Okay, then you also confirm your strategy by using additional indicators. Now, there are indicators that appear on the main chart, and there are indicators that appear on the down part of the chart. Okay, so there are two different categories of indicator in terms of appearance on the chart. So you want to at least have close to 75% of your chart visible to the naked eye, so that you can see what is going on with price action. Okay, if you are not seeing what is going on with price action, it makes it more difficult for you to understand what is happening in the market. Okay, Timothy, you have your hand up. Just go ahead. Let's take your question.
Yeah, good evening, sir. So it's not actually like a question, but I observed that the indicators you shared, they are not available on the Derive
On the
platform.
Don't worry, we'll come to that. Don't worry. We'll come to that.
Okay.
All right, thanks. Okay. So you need to confirm your strategy by you. So all these indicators we are talking about, they are what we also call in forex trading as strategy development. Okay, you can develop your own strategy that you will use by bringing indicators together to give you that result. All right. So building a strategy with indicators. A strategy is a set of objectives, absolute rules defining when a trader will take an action. I shared something some few days ago when I talked about the ZipatFX strategy. Okay. Now, that is my strategy. Now, you can go and say, okay, well, this is my strategy. I want to do my own. Once you have understand the way all the indicators they work, you cannot develop your own strategy that you can, use to trade this market. You can even enter your trade, leave your trade to run, and you go to bed or you go to work. So strategies need to have three things. One, direction. Two, entry. Three, exit. So whatever strategy you are building, you need to put these three things into consideration. Okay. If your strategy does not have direction, it's not going to be effective. Your direction is how do we know where the market is going? That's the question you ask yourself. So if your strategy does not tell you where the market is going, then it's not a good strategy. Secondly, if your strategy does not give you a definite way to enter the market, then that strategy will not be effective. And lastly, if your strategy does not tell you that at this point, I'm to limit my trade or close my trade, that strategy is not also going to be a good strategy. So these three things, you need to consider them as you do your strategy development. Say, indicators are used by traders to answer these questions and develop what? A strategy. All right. So the explanation is it clear? Because those are all what I just said in the last 30 minutes. They are just talking points, okay, about indicators. Now we are going to go into see some indicators, okay? So is it clear to you guys? Does it make sense? Let's get some feedback.
Yes, sir, it
Yes.
does. Good evening,
Yes, it
sir.
does. Yeah. Good evening, sir.
All right, good evening. Thank you. So this is the stochastic indicator, okay? So the stochastic is, you can see is a kind of a wave. It moves in the form of a wave because the market is actually a wave. And on the upper band and the lower band, you can also put a mid-level. So if you want to put a mid-level, you add the 50 level. Okay, when you add the 50 level, you're going to see the mid-level. Now, there's a school of thought that says whenever stochastic is above the mid-level, the market is trending up. And whenever stochastic is below the mid-level, the market is trending down. Sorry. Okay. But when the market is below the 80 level, is above the 80 level, we say the market is overbought. When the market is below the 80 level, we say the market is oversold. So now the peak is the sell zone. That is, when the market gets to the peak, it means that price is high. Okay? It means that price is high. And because price is high, price is going to fall. You know the factors of demand that affect demand and supply, right? So when price is high, market is going to fall. When price is low, market is going to rise. So the valley is the buy zone, while the peak is the sell zone. So the stochastic RSI indicator sits in a boundary from 0 to 100, and the red line 20 and also the red line 80 are the sell zone and the buy zone. So the area below the bottom red line is called the buy zone, and the area above the top red line is called the sell zone. So when stochastic move into the sell zone, what do you want to look for? Remember our previous class, candlestick formation. When you see stochastic in the sell zone, look for a bearish candlestick formation. If you see stochastic in the buy zone, look for bullish candlestick formation. Timothy again, go ahead.
Sorry, this is where I have started my own trading demo, and my questions will be coming in as much. So please bear with me.
Just go ahead.
So for this, I observed something that one, network is a factor. I don't know if you can confirm that for me. Your internet network plays a role, the time frame that you place. If the network, there's any network glitches, you are going to lose. That's one observation I have. My question again is, if I am below this red zone where you wrote sell zone, there's a red line there.
Yeah.
If I am within the buy zone and the first red line, can I still buy? And will it be a profitable one?
No, come again. You say if it's what? If you are in the red zone, if you are above the red zone.
No, I'm below. Where your mouse is now. I'm below that red line.
Yeah.
Yeah. The red line, the first red line below the peak. No.
This one.
Yes. That's red line and the valley red line.
Okay.
If I am within that
If you are
space,
in between.
yes.
Okay. Okay. So I'm going to answer that shortly. Just give me some more time.
Okay, sir.
So I want you to understand. I mean, as you're looking at this, stochastic, something should be in your mind now. And that thing is that the market moves to a high, come back to low, goes to high, come back to low, goes to
Yes.
high, come back to low, right? Now,
Yes. Yes.
so the stochastic is an indicator that is very effective in a rangy market, not for a trendy market. Because when the market is trending, this stochastic you see, it can come here and remain overbought. You will not know where it's going to break the red line. It can stay overbought for a long time. It can stay oversold for a long time. This setting that you are seeing that is fluctuating like this is a particular setting. You can change the setting, okay, to make it stay even longer and shorter. Okay, it all depends on you. But naturally, the stochastic is more effective in a ranging market. So if this market is a ranging market, when you see stochastic at the high, just look for a candlestick formation and a counter trend line break and take a sell, and you will profit. When the market hits the bottom, look for a candlestick formation and a counter trend line break and take a buy. You see that you will make money. Okay. But if the market is trending, it's going to defy the stochastic rule.
Mm.
Do you understand? So that's why once the market is coming out from the buy zone or the sell zone, that's the best time to take the trade. It doesn't stop you from taking the trade when it's here. It doesn't
Okay.
stop you from taking the trade when it's here. But one thing that you need to know is when you are taking the trade when it's here, the market would have gone far already. That will
Yes.
mean that you are increasing whatever stop loss you are going to be setting. It's going to
Mm.
be, your stop loss is going to be wider. So you
Mm.
try to,
Mm.
and when like there's a rule of thumb, when the market does not meet your equity requirement, leave the trade, just forget it and look for another trade. It's not
Mm.
compulsory you must take every trade in the market. Okay, because I mean the market is a repetitive cycle, so you always see trades some other time. So you can leave a trade that is here and wait for the market to enter here and possibly look for a set trade from an early point than for you to enter here, because now look at this market. This market enter here like this. It didn't cross to the
Yeah.
other side of the red and then it came back down. So if you have taken a trade here, by this time the market is here, you're already lost. You're already at a
Yes.
loss. You understand?
Right.
So because of that, we try to avoid entering in between. Okay.
Mm.
Then now from the valley, the buy zone to the peak, the sell zone, and from the peak to the valley, there are usually what? 7 to 11 candles. 7 to 11 candles. These 7 to 11 candles could be 7 minutes if you are on a 1 minute chart. It could be 35 minutes if you are on a 5 minute chart. It could be 7 days if you are on a daily chart. And it could be 7 weeks if you are on a weekly chart. And 7 months or 11 months if you are on a monthly chart. So I want you to understand it. So when you say 7 to 11 candles, it depends on the time frame that you are trading from or that you are looking at. So that's what will determine how long you are going to stay on that trade. Okay. So as the blue line moves from peak to valley or from valley to peak, is basically stating that the market is going to be bullish for 7 to 11 candles and then turn bearish for 7 to 11 candles on all time frames. See that? All the time frames. It's not restricted to any one particular time frame. So if you are watching a 2-hour chart, it's basically saying that for 7 to 11 candles, that is 14 to 22 hours, the market will be bullish. And then the market will turn bearish for another 7 to 11 candles, which is another 14 to 22 hours. Okay, so that's the implication. All right, so how do we trade it? How do we trade using the stochastic? Okay, so in this case, this is stochastic RSI. You can see the setting is 14853. Okay, that's the setting for this one. So when the market, like, look at this place. Look at this place. When this market move, all this movement to the upside, and you see this stochastic, it's just dancing at this upper zone here. That's why I told you that the stochastic can remain oversold or overbought for a long time. Okay, so every time the stochastic move into the sell zone, the buy zone, you want to put what? Counter trend line. So it enters this buy zone, draw a counter trend line here, a break of that counter trend line, you will see that stochastic is actually leaving the buy zone, and then you take a trade. It enters the buy zone here, draw your counter trend line, you will see stochastic is leaving the buy zone, breaks, you take a trade. Another one here, draw your counter trend line, market is leaving, break, and take a trade. So you can do it continuously. Okay. Now this is one way you can use. So when the market is trending, as let's say the market is trending up, you are looking for oversold stochastic condition in order for you to enter the market buy. You want to allow the market, to be oversold. When the market is oversold, that is by stochastic going below the 20 line, which is also the buy zone, you are now going to draw what? A counter trend line. So when the market breaks that counter trend line, check your stochastic again. It would have been exiting that buy zone. Okay. So you see, market break, exiting, market break, exiting, market break, exiting, market break, exiting, and continue. So if you also draw another one here like this, you see where the market is exiting. And when it comes down here, the same thing. So whenever the market is oversold, you can use the oversold to trade a bullish market, a market that is buying. And you can use the overbought to trade a bearish market. Okay? Is that clear? That's
Very
for
well, sir.
stochastic. Okay. So what we are saying now, let me just go to a chart, and let's do a sample of it. So let's say this one here, we just come here. So by default, this is the oscillator. So you come here, you look for stochastic. It's stochastic oscillator. So if you double click on it, it will be applied on the chart. That's your stochastic. Okay, this is your stochastic. So this one is 933. Now you can change, you can change the values to anything that suits you. Okay. My best value for stochastic is 937. Slowing 7. Okay, that kind of smoothing it out for me. Okay, can you see that? Smoothing it out for me. So when the stochastic enter, so now you are looking at the market. Let me look for a trendy market. Give me the S&P 500. US 500. Yeah, you got US 500. So US 500 is trending up. All right.
Please
So
later
this,
use derive example too,
okay.
please.
So look at it. Market is trending up, right? Now this market is trending up. Look at this stochastic. Oversold. Stochastic is oversold. So because this stochastic is oversold, I will come here and draw a trend line. Draw a trend line on top of this candlestick like this. Trend line. Now the market came and break the trend line here. Okay. Now I hope you know you can also draw inner trend line here. So you pick this, you draw your outer, you pick this, you draw your inner on all these candles that are going down. Okay. So you can actually see the early break here on this candle, while the stochastic is leaving the buy zone. Okay. So if you are conservative, when the market do this little pullback, you can still take the trade here at the break of this trend line. So this will be your conservative entry, while this will be your aggressive entry. Okay. And this market will run up while the stochastic is, doing its thing. So every time now you can see, even though the stochastic is doing up, coming down, going back up, this market has not entered the oversold region. If it comes down to the oversold region again, it's another opportunity for you to look for additional buy to the upside. Okay. So look at this one. So yeah, the market came oversold, oversold, oversold. Okay. So for this oversold, you can see why sometimes the stochastic is not good for a trending market. You probably could have come here and say buy. Okay, that's a short buy, very short buy. Okay, and the same way, you probably could have come here and say buy. Okay, another very short buy. But this one, this last one here, buy. This is a long buy. Okay, so now, how do you know that this buy is going to be long? So let's add the other indicator, the volume indicator. Look at it. So you see when this one says we are leaving the buy zone, we are starting to buy, and it came and break this line, and this one flipped to green, you are not going to stay in the market because this one is green. Are you seeing that? You're not going to, you now enter the market, you're not going to stay here and say, okay, this is green, 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 green. It's keep green, green, green all the way till now, till present day. It's green. You see? So you enter the market here, you use this green to stay on the trade. When this market says this guy is green, and then stochastic came oversold, look for another opportunity to enter. Okay? So let's see. Okay, good. So look at this. This market says green, and then stochastic came here and say oversold. When you see stochastic in this oversold region, what you will do is to draw a trend line across this area. Draw a trend line here. The market breaks that trend line, boom, you enter the trade. And because of this green, you stay on the trade for a long time. Is that clear?
Hello, sir. I want to ask a question, sir.
Go ahead.
The volume indicator you're talking about, the one with that looks like an histogram, how do you assess it? From what, is it from oscillator or from trend, or from where do you assess it?
No, so it's one of the indicators that I've downloaded and installed, right? So
Okay.
you can access it from your indicator list. Yeah. So the name is Solar Windjoy. Solar Windjoy, this is the name.
Solar
So
wind
you can
joy.
access it from here. Now you can say, okay, so let me put one of my templates here. Let me just apply one of my templates where I have A, B, C, D, E, D, D. Okay, let's apply D. Okay. Just one moment, Prince, just hold on. So look at this. So now this is the same indicator, it's the same Solar Windjoy. Okay. This is a trading system that I have built by myself. So I have stop reverse indicator that tells me, oh, this is a support, this is a resistance, this is support, this is a resistance. Okay. And then look at this. This, they are not the same value. But can you see all of them flip to the upside, telling me that the market is buying? This one is 240. This one is 260. This one is 280. I seen that. So I did it all the way to, I think, 120. Okay. You can see here, look at what this thing is telling you. The market says all of us are buying. Everything is buying. Market is buying. But these two pulled back, telling you that, oh, even though everything is buying, there is a pullback. So when these two flip back again in the buy direction, it means there is a continuation from here. The market, the pullback is now over. The market has a continue. So from here, you now look for an entry and join the buy again and stay on the trade. So anytime you see you have all of them going in the same direction, and either one or two pulls back, when they go back in that direction, look at this one, these two. 1, 2, 3, pull back. 1, 2, 3, pull back. Now all of them switch back into the buy mode, and then you stay on the trade again. You see that?
Okay.
I don't know if it's clear to you guys.
It's okay. You said from indicator list, right? We'll look for it. Solar wind joy.
So,
Thank you very much.
it's not on your indicator list. So what you need to do first, let me tell you a short way to get it. Just go to Google and type solar wind joy for MetaTrader 4 or 5. So for MetaTrader 4. So you see plenty people that offer it. Okay. So if you open this, let me see this. If they have it there, you can just download it right there. Okay. So you can come here. Yes, you click on download and you download the indicator. Once you download the indicator, it's going to come out as a file. That file, you copy that file, you go to your MetaTrader 4, click on file, click on open, click on when your file open, click on MQL4, click on indicators and paste it here. Paste it on this space. Anything you paste on this space will appear here in your indicator list.
Okay.
Is that clear?
All right. Thank you. Thank you.
All right. So anything you paste there will appear on your indicator list. Okay. So very quickly, let's put this on down. So very quickly, this is an indicator. You may not have this, but I will just talk about it. Maybe if you decide to go and get it because it's not free, you have to buy it. It's called Smart Gauge. So the Smart Gauge is an indicator that can only be found on Smart. I don't know if you have heard of Smart Trader. Anyone here heard of Smart Trader?
Yes, I thought I saw that on Derive.
No, Smart Trader is just like Trading View. You know Trading View?
Yes.
So it's an online Forex chart and education provider. So they provide chart, they provide space for you to be able to trade, use their charts. You can even connect your broker through their platform. So in Smart Trader, there are a lot of advantage of using Smart Trader. And this is one of them. So this indicator is only available on Smart Trader and it's not free. You have to pay for it. I think it's about $100. If you buy it, $100 is a lifetime. You don't need to buy it twice. But this is what the smart trader does. So the smart trader, that's why I say it looks like TradingView. So the smart trader helps you to gauge what is happening on different time frames. So these are different time frames. Okay, this is 1 day. This is 8 hours. This is 1 hour. This is 4 hours. Okay. Now, if you come here, you see here the smart trader, the smart gauge here is showing you daily, 8 hours, 4 hour, 1 hour. Now, in this scenario, you see that so it's not just showing for showing sake, right? There are conditions behind that is informing the decision of showing you that this speedometer is reading a buy or is going to read a sell. Now, what we want to do if we're using smart trader is we want a situation whereby all the indicators are saying that we are buying. If every of these indicators say we are buying, what it means is that 8 hours is buying, daily is buying, 1 hour is buying, all of them are buying, then it means that that currency pair is actually bullish. Okay, so you see the market bullish, 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 and then the smart gauge is telling you that all of them are buying. Then you look for an entry. And how do you look for entry? Pull back, break trend line, enter, right? When all of them are buy like this, we want to trade buy. When all of them are sell like this, we want to trade sell. And when you have some that are buy and some that are sell, do not trade. Because we don't know what is happening. The time frame, it means that the time frames are not lining up. Okay. But all these are also a function of what you set here. Okay. A function of what you set here. So whatever you set here, this is where you have premium now. There are other conditions that you can select for the indicators to work. So whatever you set will determine what the indicator will see. But trust me, this indicator works perfectly well. Okay? It works perfectly well. So when you say everything is a buy, the market will actually be buying. Then let's talk about the 1, 2, 3 strategy. I know I've mentioned it to you guys before, but this is one way for you to find, is for you to enter the trade, basically, for you to actually enter the trade. So there are 3 things you look for. So you look for 1, candlestick formation. 2, you look for counter trend line break. 3, you look for stochastic leaving either the buy or the sell zone. And you can use it in a consolidation market. You can use it in pivot point. You can use it in the extension of Fibonacci. You can use it to buy or sell A to B. You can use it to buy or sell B to C. You can use it to buy or sell C to D in our ABCD structure. Okay. So in this case, this is just an example of a buy example. The market is already establishing to you that is buying. Why? Because the market has created a high and it has created a higher high. So once the market has created a high and a higher high, it means a trend has started. If the market has created a low and a higher low, it means a trend has started. So how do you take advantage of that trend? Watch the market. The market pulls back. Watch your stochastic. Your stochastic is already in oversold condition. What do you need to do? Draw a counter trend line break. Wait for this market to break this counter trend line break, this counter trend line, and then look at the stochastic if it's actually leaving the buy zone. Yes, Jerry, Prince, go ahead.
Yes. I want to ask because I'm a little bit confused about this the way you draw the counter trend line, the way it's being drawn, like this particular example I'm saying now. I was thinking that we need to get the start has to be from the top, the last high. That's where your counter trend line starts from. Then you draw it to your right hand side.
Correct. So you are correct. If you pick it from here, look at when you pick it from here. Remember, whatever you draw from here to here, then when you pick it from here now, it's going to come down to this place, right? It's going to come down here. When you stop here, this line will still continue, right? But now, that point where you stop is where you can draw your inner trend line.
True.
We didn't just show you that you draw long term or outer the inner. So you just took the inner direct. Okay, so when you draw the first trend line, it stops here. You are still going to draw the inner trend line. So this inner trend line is this one that you are looking at now. This is your counter trend line.
I don't know okay, so yeah, so with this now, the next question is with this now, after the break of probably the inner trend line, do we really check for, like, wait for a retest of that line, or we just look for the candle formation to enter the trade?
Since look at your stochastic. Since your stochastic, there are three conditions. One, you want to see a candlestick formation. Two, you want to see counter trend line break. And three, you want to see stochastic is leaving here. Now, let me tell you one thing about this trend line break. If your market breaks your trend line, and that candle that breaks the trend line is a candlestick from, as in, it's a decision candle, enter the trade. No, you don't need to think twice, just enter the trade, okay? But if the candle that breaks the trend line, like in this case, now this candle is not a decision candle. This candle does not suggest that, oh, we can buy. You will need to wait to see a decision candle. This is a decision candle. This is a momentum candle. Do you understand? So even though this small candle breaks the trend line, you cannot take the trade because there is no decision here. Do you understand? There's no decision candle here. So when the candle that breaks the trend line is not the decision candle, let's say this one now is a decision candle, but this is not the one that breaks the trend line. We want to make sure that 70% of that candle is above the trend line. 70%. Let's say this candlestick, let's assume that this is the candlestick that breaks the trend line. We need to see 70% of this candle on the other side of the trend line. If not, then you need to wait until you see a momentum candle like this. That validates your ability to enter the trade from that point. Or else you have to wait until you see that there is more buyers than sellers that are actually pushing the market to the upside, because the market can break the trend line and still come and close below the trend line. You understand? It can break the trend line when you think, oh, the market is going, the next the market comes back and close below the trend line, and everything, the whole story will just change. So that's why you need to want to wait to see this decision. Then you cannot take the trade. Okay? And if you look at this one, look at how well it gave you the first decision candlestick. The next one that follow is another massive decision candlestick. See the pullback. The pullback is not your business. You have entered the trade, Allow the trade to go to what? To its final D extension. And that's how this market ran all the way to this point. Okay.
Okay, I don't know. Will it still be advisable after drawing the trend line? This is an H1. This is your 1 hour chart. So after getting your counter trend line, will it still be advisable? Say, you drop down to maybe a lower time frame, say maybe M30 or M15, just to get an entry, like to get your formation, candle formation there. I don't know.
So the disadvantage of doing that is this. You see this stick, this candlestick that goes up like this and came back to close like this. In your smaller time frame, that could be a deceptive decision candlestick. Do you understand? In your lower time frame,
Yes.
this could be a bullish engulfing candlestick, but immediately after that bullish engulfing is another bearish momentum candlestick that took out that bullish engulfing. So most time it's better to stay like this one is 1 hour. So I would suggest that you stay on the 1 hour and take the entry that the 1 hour gives to you. Because sometimes in your attempt to take a very early entry from the lower time frame, the market end up taking you out, because remember, this higher time frame is always stronger than the lower time frame, and the market will always go in the direction of the higher time frame.
Okay, thank you.
So the same thing that we have done for bullish, we do exactly the same thing for bearish. Okay, so the market, you draw a counter trend line, wait for a bearish candlestick formation. In this case, we have the inverted hammer, okay, or you call it a doji star. This is like what do you call it, bearish doji star, okay, and then the market breaks the counter trend line. Then the next thing, the market is also leaving. Look at it, is leaving the sell zone on your stochastic. When you have all these three conditions met, this is what we call the 1, 2, 3 trading strategy. And then the market fell. Okay. So this just gives you, it makes your entry easy, right? It will just be very clear to you. Okay. All right. So another thing you can do is to go to trading view. Okay, so this is trading view. If you go to trading view, you don't even need to be a member. You don't even need to register. All you need to do is just create a free account. You don't need to pay money. Well, some people pay, to access more premium features, but you don't need to pay money to see this. If you go to trading view, this is Forex screener. Now I'm screening look at this place, the major pairs. I can change this place to give me minor pairs. I can change it to give me, anything I want. So these are the major currency pairs in the world. And TradingView will just tell you, remember, this result you are seeing here is a function of what you click here, and here. So it's giving me this result because I selected trend following. If I change from trend following, this result can change to something else. Okay, so you need to be mindful. You need to be mindful of what you are selecting here. Okay, so if you go to TradingView, TradingView can give you an idea of what the market is doing. So based on this information, TradingView is telling us that AUD USD is neutral, while Euro USD, GBP USD, and the USD CAD are buying and a strong buy. Okay, then NZD and USD CHF, including USD JPY, they are selling. Okay, you see how sometimes this market can confuse you. Now you want to think that, oh, because Euro USD is buying, USD CAD should be selling. That's what you want to think, right? But unfortunately, it's not like that. Now, it's not every time. There are times that the currencies are positively correlated, and there are times that they are negatively correlated. Like Euro USD and GBP USD, a lot of the time they are positively correlated. So you see that they are going the same direction, almost half of the year. Okay. But There's also a time when they are negatively correlated, when one is going up and the other one is going down. Okay, so this is a technical. So if you look at the technical, they select two things. You have oscillators and you have moving averages. So on this left is oscillator, on your right is moving averages. So when moving average and oscillator are telling you that the market is a buy, your overall summary will be a strong buy. But like here, moving average is saying strong buy. Then oscillator is saying neutral. So your resultant is saying that the market is buying. So the resultant result is not very strong. Are we just in this oscillator is also saying buying? If it's saying buying now, this buy would have been stronger than this. Maybe the result would have been strong buy. Okay, so this you can do with your trading view. Next is the trading view heat map. So this is the heat map. If you look at the heat map, the color you are seeing will tell you what is happening, whether the market is buying, whether the market is neutral, whether the market is selling. Okay, so your red is a sell, your green is a buy, your gray is neutral. So all these colors, okay, will tell you what these are different instruments. Okay, this is heat map. I don't know how many of us know how to use heat map. Okay, then another place you can also get an idea of where the market is going is your baby pips. If you go to baby pips, there's a new segment that they have added that is called market mail. When you click on the market mail, it will give you each of the currency, their strength. So this is telling you that the US dollar is strong, while the New Zealand dollar and the NZD is weak. Now, in Forex, we want to trade strong versus weak. So all the ones that are showing red, they are weak, while all the ones that are showing green, they are strong. So I want to sell NZD USD. Why? Because the USD is strong. So the USD is going to pull the NZD down and the NZD is weak. So if you go to the chart of NZD USD, let's look for NZD USD. You will see that of a truth, the market is actually selling. So if you go NZD USD, see that of a truth, the market is actually selling. So this result that you see here is very, very accurate. Okay. And then if you go to investing too, you can also, in fact, in investing, you can create a portfolio. And there's a way you can set, so you can see this is 5 minutes, 15 minutes, 1 hour daily. Okay. So it's telling us that the hourly are sell, the daily is a strong buy. This is for Euro USD, GBP USD. So look at it, moving averages, indicators, moving averages, then other indicators, then summary. So the summary, overall summary, is telling you strong buy, neutral, strong buy. So what does that tell you? It tells you overall that this market is buying. The same thing here, strong buy, strong sell, strong buy. It tells you the market is buying. Strong sell, strong sell, strong sell, strong buy. So by the time you combine all this with this, we tell you that our market is going to be a sell. Okay. So you just from these so everybody have access to these things. So let me just quickly show you how it appears in real life. So if you go to your web, okay, and quickly, so this is baby pips. So when you click on baby pips, you see market make. When you open baby pips, you see market make. Click on that market make. Market make will automatically bring for you this screen. Okay, manually bring for you this screen. Now this is showing like this because I select read time. If I select last close candle, it's going to change. See that? if I change the time frame to 1 week, it's going to change. If I change the time frame to 1 month, it's going to change. Are you seeing that? So if you are trading on daily or on 4 hour, you come here, you select your time frame. Now, if my 4 hour is giving me this, now this is CAD, very strong. NZD is weak. So it means that if I say NZD to CAD on 4 hour, the market will be selling because my CAD is my quote currency. If your quote currency is stronger than your base currency, the market will sell. If your base currency is stronger than your quote currency, the market will buy. So in this case, look at USD, look at Euro, see this USD, see the GBP. Even though both of them are strong, the GBP is stronger than the USD. So it means that GBP USD will buy. Okay. I don't know if this is making sense to you guys. This will help your trade. It will help your trade. It will help your entry. Okay. Now this thing, you also have the paid version. Let me see if my subscription is still valid. I don't know. Okay, let me see. Market snapshot. Okay, I think mine is not expired, but let's see, watch this. Okay. So you can come to watch list like this and say you want to see all the euro pair. So you click on euro pair. When you click on euro pair, it will load all the euro pairs for you. And then you can come here and see what each of these. So it's euro NZD, euro AUD, euro GBP. So now euro NZD has moved fast. So you can come here. Let me say this is pips, right? Let's see. Okay. Okay, so pips, yeah. So you can see euro NZD has moved so far. It's not advisable to join it again. Euro USD is just starting. Euro JPY is just starting. Okay. So basically, you can use here to make a choice of whether you want to trade or you don't want to trade. So for this one that I just start, like this one, this buy just started. It has not moved only 1 pip. So if this currency is a mark to move like 70 pips, this is the right time to enter a buy and stay until it moves that 70 pips. Okay, so you can pick from any of the market watch, any of the currency pair basket, and you can make a choice of what to trade. Okay, so that's for baby pips. So if you come to trading view, like I was showing, so this is trading view. So you come to product and come to Forex screeners. Select Forex. You select Forex, you will see that which I just showed you now. Okay, telling you what the market is doing and what the market is not doing. Now you can come here. You can come here and say change it to 4 hours. Okay. Now you see this is only accessible to those that are paid subscribers. So you can't change the time frame. So they allow you to only have access to higher time frames if you are not a paid subscriber. But you can come here and instead of showing major, you can uncheck the major and check minor. Okay. And it's showing you now only minor currencies. So you can see. So let's say you don't know how to trade at all. You don't know how to trade. You have not done trading before. You just come here and see AUD card is a buy. In fact, strong buy. Then you go to the chart. You go to chart, AUD buy, AUD card. Look for AUD card. AUD card, yeah, you say pick AUD card, and now the market say, you say what? The market says it's a strong buy, right? That's what TradingView told us. TradingView says it's a strong buy. So now, when you now come to the market and you get here, what will you do? You will leave this market until the market comes and break a counter trend line. And the last class I told you that once the market has given you three bearish candles, so this is a pullback, right? The market is pulling back. It has given me 1, 2, and this is the third one. Once the market has given you 3 bearish candles, I say draw a counter trend line like this and wait for the market until it comes and break this counter trend line. When the market breaks this counter trend line, check if you have a candlestick formation, check if your stochastic is leaving the buy zone, and then you can continue in this buy, which is what this guy is telling you. Say AUD card, strong buy. Okay. How do you take advantage of that strong buy? It's what I just explained to you now. So you can join the trade. So you can just come here, pick any of these, and use here as your trend. So it's telling you where the market is going. Then you now go to your chart and look for trade in that direction. Okay, time is fast spent, but let me see if I can enter the. Okay, so that's how you use TradingView screener. So you have, the beautiful thing is that here you have screener for stocks, you have for Forex, you have for ETFs, you have for cryptos. So you just don't need to bother your head. Then you can also come to the heat map and select those they don't have for Forex, but they have for stock, they have for ETFs, and they have for crypto. Okay. Then you can also check the trading calendar, the economic calendar that tells you what is happening in the market. Okay. So this is one of the ways you use trading. Then you can become a subscriber, right? Subscribe, you pay, you have access to some premium features of TradingView. Okay. So that's how I use most of the indicators. So the next, this one I'll just rush it. Okay, I'll just do it fast because I don't want to come back to it. All right. So it's still the same trading with indicators. Okay. But this time, this is what FSCM used some around 2017 or so. Okay, so if the market is making higher high, higher low, higher high, higher low, it means that the market is trending up. If the market is making equal top and bottom, so you have a top here, bottom, you have a bottom here, top here, bottom, so the market is ranging. Why? If the market is making lower high, lower low, lower high, lower low, so the market is trending down. We already know this. Okay, so when the market comes and break this top, so the market is trending down here, going down, come up, go down, come up, go down, come up. And then in this instance, it didn't get to this bottom. So this is a higher low. And then it now came and break this top. Okay. So this trend to the downside is now violated. Okay. The same thing, the trend market is going up. Instead of the market to create top, bottom, top, higher top, it now created a lower top. Okay. And when the candle breaks this bottom, then you have a trade. All right. So some of the indicators, some of the popular indicators are momentum. I don't want to go through the mathematics. I just want to take you to the indicator. So the indicator has levels. Okay. So there's the level, the 100 level is the mean level. So anytime you see the momentum above the 100 level, that market should be buying. Anytime you see momentum below the market, the 100 level, the market should be selling. Okay, so this is the momentum. This is the 100 level. Because this momentum is above this 100 level, that's why I see that this market is buying continuously. And then look at when momentum cross to the bottom of the 100. Then now, from now on, we're now looking for a sell. All right. Then MACD. So the MACD has default values when the MT4 is downloaded, and the default value is 12.26.9. 12 is the short or slow moving average. 26 is the 12 is the fast moving average. 26 is the slow moving average, and 9 is the signal. This is how it looks like. Okay. So if the histogram is above the 0, it means that the market is trending up. And then if it's below the 0, it means that the market is trending down. So this is a histogram above the 0 level. And like I told you, when the histogram start pulling out of the signal line, I mentioned it before, like this one, and the market wants to buy, we don't want to wait until this histogram start crossing this 0 line. We start looking for when the signal start pulling away from the histogram. When the histogram start pulling away from the signal line. So this is the early entry. So you see that this entry will probably put in the market somewhere here. But if you are waiting for this one to climb up, you are going to be entering the market at a very high price. Okay. All right. So that's the MACD. Okay. This is the MACD doing exactly what it knows how to do best. Okay. Okay. Like I said, it's more effective in the ranging market. The moving average, so we have single moving average, we have double, we have triple, we have quadruple. You can make as many moving average as you want. Okay. So this is a simple moving average where the market has broken to the upper side of the moving average. I told you that the moving average separates the market into buy and sell zone. So everything on top of the moving average is a buy, then everything below the moving average is a sell. Okay. So when the market is above the moving average like this, and you see that the market now starts making bearish candle towards the moving average, draw your counter trend line. In this case, now look at this. Look at this. If you draw this counter trend line, you see the candlestick that is going to break the counter trend line is a bullish engulfing candlestick, this one. Okay, so you can actually buy the market from here, and then you take all this profit to the upside. Okay. Then, okay. So we can combine all these indicators that we've talked about as one trading system. We have the momentum, we have the MACD, we have the moving average. All of them telling us that the market is buying at the same time, then we should not hesitate. Momentum is above 100. MACD histogram is above the 0 line. Moving average, the candles are on top of the moving average. What do you want to do? You want to buy this market, and you start buying until the market bends, which is here when it breaks below the moving average. You see, as it's breaking below the moving average, MACD is flipping to the downside, and momentum is flipping below 100. From here, from where the market is right now, you start to sell. Parabolic SAR is a trending indicator. Okay, I'll just go and show you the way. Sorry. So it shows like it comes in the form of a dot, but it's as good as your moving average as well. So when the market is on top of it, the market is buying. When the market is below it, the market is selling. Okay, it's not something. It's not very, very popular. Okay, very few people make use of it. Then the average directional index, the ADS, this one. So you see there's a blue line, and then there's a green and a red line. that blue line is your ADS line. Now, if you see to your extreme, on the right, you see the number 25, right? That 25 is your level for the ADS. Okay, so the ADS is the blue line. That blue line, once it's above 25, okay, you want to look for the green line above the red line to start buying. Okay, you see the green above the red to start buying. So that's the way the ADS work. So the green line and the red line, we call them the plus D and the minus D. Okay, so if ADS is above 25 and the plus D is above the minus D, then the market is going to buy. Okay. So this is how the signal looks like. Okay. So ADS above 25 is used to identify financial instruments that are trending. So because ADS above 25 tells you that the instrument is worth trending. The DIs are used for actual timing purposes to either buy or sell. So when the plus crosses above the minus, it tells you that the market is going to buy. And if the minus crosses below the plus, it tells you that the market is going to sell. So this is what we're talking about. So we see the plus crossing above the red, okay, and the average directional signal line, the blue line, you see that is way higher than 25. Okay, so telling you that the market is going to buy. Okay, so these are ADS signals, then stop loss. Right? So the Bollinger Band, I talked about this already. I said the Bollinger Band has 3 bands: the lower moving average, the middle moving average, and the upper moving average. So the moving average and the middle separate the market into buy and sell zone. So when the candlesticks are between the mid zone and the lower band, the market will be selling. And when the market is between the mid line and the upper band, the market is buying. That's just the simple way to use MACD. The only thing you need to watch out for, to use the Bollinger Band, the only thing you need to watch out for is when there is a fundamental and the market is contracting. You need to be able to tell that prior to the fundamental, that contraction is going to explode, right? Now, that contraction will last for a period of maybe between 30 minutes to 1 hour, and then between say 1 hour to possibly maybe like 4 or 5 hours. Okay, and when the market finish that contracting, the next thing you will see, the market will break to one side. When it breaks to that one side, that's when you want to trade. Okay, look at this. Look at this Bollinger Band. Okay, and see how well this market stays below the 2 band, between the midline and the lower band, and see how the market drop all the way down. Because you can see that all this movement to the downside, the market did not break above the midline. Okay, so this is an example of the contraction I'm talking when there's a possible fundamental news coming. Bollinger Band will contract like this, and then break to one side. After the breakout, then you can take additional trade. All right, so we've talked about stochastic before. This is just a repetition. Okay. Okay, so that's it for our indicators. Anybody have question for indicators?
Hey, I have a question. Good evening.
Good evening. Evening.
Yeah. Will the market follow the same rule or strategy in trading, or is there any likely time to have a change? That's my number one question. And number two is, what is the hard time when somebody will encounter difficulty in this trading within a year?
Okay, so one thing is for you to understand what we have done. Another thing is for you to apply what you have learned. Okay, so people that come to Forex, a large portion of them come with the impression that they want to make money really, really fast. Yes, there's an avenue for you to make money really, really fast, but first, there's no shortcut to the knowledge. Okay, so you need the knowledge. So the market, somebody once said that the market will do what it wants to do at any time it wants to do it. And the market can decide to do that thing 20 times. And every single time the market does it, the market will always be right. Okay? So knowing fully well that the market is always right, you, the trader, you want to follow the market. You want to see how you can profit from what the market is doing. Not you trying to reinvent the wheel for the market. No. If you try that, you lose. Okay. So in a year, there's a popular, theory that says that the market trend 30% of the time, and the market ranges 70% of the time. So the time the market trends is smaller than the time the market is ranging. So that place where you usually will be making losses is when the market is ranging. When the market is ranging and you are trying to trade the market, there's a chance that you can lose your money. Okay? There's a chance that you can lose your money. So you need to be very, very careful whenever it comes to trading in the Forex market. Okay? So Mr. Seth, the market does not have a time. It does not have a time when you say, oh, this time is the most profitable time. What you need to do as a trader is to make sure that you are aware of macro and microeconomics announcement, okay, so that you can also profit from them. Okay, you can profit from them. So those are the few things I can tell you when it comes to that. So once you, like I showed you guys that these are systems, okay, that I'm building, right? So I build this system for myself. So now you can build this system. You can build a very simple system, which I did one with you the other time when I used this. I came here, I built the system, I saved it, okay, and we call it ZipatFX trading system. So let's apply it. So this is our system. This is a system that we built. We built this one together in one of our classes, right? So I would say when the market is above, when the candlestick is above the moving average, the market is a buy. When the candlestick are below the moving average, the market is a sell. And I said, watch when the three moving averages are parallel to each other. Okay, when the moving averages are parallel to each other, it means the market is trending. Okay. But when they are not parallel to each other, then the market is not trending. Okay. So that's for move. So for your moving average strategy, you want to consider either 2 moving average or 3 moving average or even multiples of moving average. Okay. You can consider that in your strategy, and if you set the conditions, because one thing is to create the strategy, another to set conditions you think the strategy should be used. You know, those conditions, you have to make sure that those conditions are met, okay, before you enter the trade. So if you have set the condition, follow the condition. Don't deviate from it. Don't rush. Most time we rush and we end up entering bad trades. Okay. So if you come to my own system here, these are some. So if you see, if I pull this place down, you see there's a lot here. Everything you see here, they are different. They are different systems, and some are specifically for certain time frame. So this is daily time frame. I can come and I say, put a system that I designed for daily time frame, which is this. So if I come here and I put this system here, this is system for my daily time frame. Now, when you look at this system, you see that all the moving averages are pointing to the up direction. So my base is the black line. Look at this black line. That is the market. When the market stays on top of this black line, it can stay on top of this black line for a very long time before it changes direction. That's a long-term trend line. That's a very long-term trend line. Okay. So you can create something like this. In this migration, number one, I want the market to form either this arrow or this arrow or this arrow, any of this arrow, okay, at the bottom. Then I want the market to form this arrow. Now, when the market form this arrow, I will now check for trend line break. Okay, so I'll draw a trend line from here to here to here to down. Okay, so I will see where the market breaks the trend line. Then based on where the market breaks the trend line, that will determine what I will do next. Am I going to enter the market because the market has broken the trend line? No. So I have a condition that I want the market to meet. And I did share that not too long on my, let me see if, all right, yes. So I say for you to buy, check that your MA lines up and are parallel to the upside, okay, which is what you are seeing here. So the MA, they are lining up and they are parallel, they are going up, okay, very good. Okay, once you have done that, I said allow the market to pop up with the arrow signal buy, because now my market is lined on to the up direction. So I don't want to trade arrow signal sell. I want to trade only arrow signal buy. So when the arrow signal buy pops up, what I will do, I will draw a counter trend line. Okay, I'll draw a counter trend line. So I draw that counter trend line. I wait for the market to break it. And then once the market breaks it, I'm supposed to just enter the market buy, but I said no. Instead of entering the market buy, when the market breaks that trend line, the market is going to move and move and move until such a time when the market will stop. So it is that point where the market stops that I will make a decision whether I want to trade or I don't want to trade. So when the market stop, how will the market stop? Let me pull this chart out and then zoom it out a little bit. Okay. So you see the candlestick. So if the market breaks the trend line, the market will keep going. So to explain this better, let me use something that does not have disturbance so that you can see it clearly. So this is exactly the same thing, right? This is the same chart. Now, when the market breaks the trend line, okay, what I want to do is I want to wait for the market to move, and stop. What is move, and stop? The market is moving like this, and all of a sudden, it creates a bearish candle immediately after the bullish candle. That's your first stop. So that your first stop, your entry into the market, let's look at our condition again. Your entry into the market is when the market pulls back to the low of the equal open and close candle. Equal open and close candle is what we call bullish candlestick followed by bearish candlestick, or bearish candlestick followed by bullish candlestick. Okay, so immediately the market formed that for you, you will now mark. Let me take an example here. Okay, let's even take an example here. So this is a trend line, right? We can even go like this. Can even go like this. Okay. Inner trend line can come like this. So this is the trend line. Now look at where the market broke the trend line. Some people will just aggressively enter the market here. But my strategy, look at my strategy. My strategy is, they don't say I should just enter. Then my strategy say I should wait for the market to create an equal open and close candle formation. So when the market breaks this trend line, I do nothing until I see that the market creates a bullish candle, immediately followed by a bearish candle. You see that? Okay, so now look at the next condition. The next condition says enter buy at the low of the equal open and close candle. We agree that this is our equal open and close candle. Look at it, a bullish candle followed by a bearish candle. We say enter buy at the low. This is the low of the equal open and close candle. So we'll buy the market here, put stop loss, okay? And from here, this market rallies. Is that this thing that I explained, is it clear?
Very clear, very
Or is
clear.
it confusing?
No, it's okay. You said after the first bearish candle,
Yes.
then you see the upward movement on, you can also talk about two equal, is it equal height or equal length? From there you now
Yes.
start trending up.
So when I say let me explain it further. Let me explain it further. Okay. So look at this candle. Look at this candle. The market starts from here going up. As this market is going up, this is bullish candle, bullish candle. You always see that the bullish candle goes above the previous bullish candle. So this is the open of this is the close of this, and this close of this is always higher than the opening of the previous one. Higher than the close of the previous one. So this one close higher than this one close higher than this one close higher than this. It continues like that until this point. This one did not close higher than this. This one closed even below the opening of this candle. So this up here is what I call equal open. This is the close of the bullish candle, and at the same time is the opening of the bearish candle. So when you have this equal open condition here, I say stop. Enter your trade. Look at the condition on the WhatsApp. Enter your buy at the low of the equal open and close candlestick. At the low, where is the low of the equal open and close? This is the low. There are two lows. This is low, but this low is lower than this low. So I say this low, this very low, the lowest one out of the two lows, that is where you will buy your market from. You take a buy here As I when you are buying this market here, this one is just starting, this one is just opening. You don't know if it's going to go up or it's going to go down. But because the market has broken a trend line, this is the trend line that the market break. The market has broken the trend line. After the market break the trend line, it has not seen any pullback. In some cases, let me give you another instance. In some cases, the market can break the trend line, like this case. Look at this case, for instance. This is the trend line here. Okay. The market breaks this trend line, it goes bam, 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 and it creates this equal open and close here. Okay. And I say buy the low. The low. This is the low. You come here. This market pulls back to this low. You take a buy here, and all this one rally in your favor. All this one goes up in your favor. Does that make sense?
Yes.
You can do this over and over and over again and again in this market. Do you understand? Okay. So that's one of the ways that you can take advantage of this market. You know, entry your trade buy, entry your trade sell. Okay. So you need to go and create your trade. So let me see if I have that. Let me show you that MT4. Sorry, this one. Yeah, MT4 trading system. Just for you to see. So these are some systems. Okay. This is a system. This is a system. This is a system. This is a system. All these are different systems. Okay. Now, okay, we talked about regression in our class. This is something like, see this, you see this? This is like, this is a regression line. Okay. So this system could be a regression system. Okay. Now, I'm going to show you. So this system, you don't necessarily need to create it yourself. Okay. Some person has already created these systems. Okay. And these systems are everywhere. Okay. But there's a site. There's a website. This website, Forex Strategies Resources. So on this website, look at this place here. There are so many things, okay, in this website. So much. They are both for indicator and expert advisors. So if you come here, let me say, if I click on this MetaTrader System 2, okay, when you click on it, it's going to put these things that you are seeing. Now, these are different systems. They are numbered 151, 152, 153. These are different systems that people have created. So they don't want you to struggle to create it. Okay, so anyone will click here, anyone, let's say I want this daily Forex signal. You click on it. When you click on it, it's a system. Okay, it's a trading system. Look at the system. Okay. So when you come here now and look for the indicators that they use to create that system, if you scroll down, look at the indicators. These are the indicators. You just click download. You download and go and save this indicator into your MetaTrader 4. Then inside, if you download it, let me download this one so that you see. If you download this one now, start download. Okay. Let's see what we have downloaded. Compress. So look at the system. This is what we downloaded now. You can come here now, open this folder. This folder that we just downloaded. Now look, This thing that is here, these are indicators, right? And one of them is a template. So look at it. This one I carry ES4, ES4, ES4. These are indicators. Why this one I carry TPL is a template. So you can carry this template now, copy this template, come to your MetaTrader 4, click here, click open, go to templates, Oh, this MetaTrader 5. I'm opening MetaTrader 5. Sorry. This is MetaTrader 4. So come here, go to open, then look for template, and just paste it there. Just paste that thing we copied. Okay, look at it. Forex signal. That's the name of the template. Okay. Then the next thing you do, you go to the file and copy all these indicators. Copy all this all the way to this place. Okay, just say copy. And come to your file here, select MQL. Come to this template, just go back one step, select MQL4, select indicator, then come here and say paste. Paste it there. Okay, so I have 4 of those indicators already, just replace. Okay, so now I have successfully installed that trading system. So if I come here now, change this to this, close this MT4, then open it again. Anytime you install indicator, you need to close your MetaTrader 4 and reopen it. So now that we reopen it, we'll now go to template. Okay, let me see why it's not showing. Okay. So you go to MetaTrader 4 and I want it to be highlighted. You now come to this template here. So you're now going to look for that. What do we call it that time? Forex signal, right? Is it Forex signal? Let me see. What's the name?
The Forex strategy of Forex signal.
Let's see. Template. Forex signal. Okay. So now we'll come to our this thing here. Select template, click load, then look for Forex signal. Forex signal, just go to Forex signal, click on Forex signal and apply. Once you say open, it's now going to automatically give you that system. Yeah, I know. Okay, so this system tells us to buy from here. It tells us to sell from here. It tells us to buy from here. Okay. So you just see the buy, sell, buy, sell, buy, sell, buy, sell. Okay, so this website, there are a lot of it. There are a lot of it. Too many. So if you can just come here as somebody that is new and you say, oh, I don't know too much. I just want to pick something that works. Okay. You can select any trading system from this place. Anyone. Okay. And apply to your chart. Okay. And it will work. And they have both system for MetaTrader 4 and for MetaTrader 5. Okay. So if you come here, this is MetaTrader 5. It will show you MetaTrader 5 indicators. These are indicators of MetaTrader 5 A to Z. So if you select A, it will pull out indicators that are A, okay, for you. If you select B, it will pull out indicators that are B for you. And also, when the people, whoever develop, you see, all these are indicators, okay? Whoever develop a system, the person normally will give you the entry strategy, what you need to see to buy and what you need to see to sell. You will see it in the description, okay? So I like the trend following strategy. So you come to trend following strategy, okay? You can pick this Forex profit system. All right, so you pick any system here is fine. Perfect order, 4-hour trend, any system, yeah. Just pick any system here, say trend 2. Once you pick the system, they will give, look, so like this one said long entry. What do you need to see to buy? Short entry. What do you need to see to sell? So if you look at this system, look at it. Come here. This description will tell you what you need to see for you to enter buy. And if you come here, you will not see, you will see what you want to see for you to enter buy. Okay? So whatever the system tells you to do, that is what you will do. All right. So lastly, before we close, I know some persons want to see the derivative trade, right?
Yes, very much. Yes.
All right. So if you come to derivative, so if you go to derivative, this is their website. So you can come here, you can create an account, okay, of your own. Now, once you've created the account, you are going to be taken to the Traders Hub. So I'll just go to the Traders Hub direct. So if you come to this Traders Hub here, the new Traders Hub, so look here, you see real, and here you see demo. Okay, so this is demo, this is real. Okay, so under your demo or under your real, you see everything here. You see derivative trader, binary bot, smart trader. These are different things that you can trade. This segment, this bottom segment is where you use your MT5, your derivative MT5. So your derivative MT5, this software, this is MetaTrader 5. This is what you use to trade. This is what you use to trade this your derivative MT5. So you see here now, there's no, under this demo, there's no account here, there's no account here. There's an account here, there's an account here, there's an account here.
Incoming mail.
So the one that have number, this number shows that there's an account. The one that's showing you get, it means that you should open an account. That's the interpretation. Okay. Why here? So I talked about, making money quickly. And so if you want to trade on this derivative, you can trade it on your MT5. So I just open my MT5 derivative. Now this is my derivative MT5. Okay. Let's say Control T. Okay, so this derivative MT5, you can use it to trade. If you say Control M, market watch, you see everything here, you can trade it. Everything here, they are all tradable. You can trade everything here. I have about 200 and something asset to trade from in this place. So anyone you select is what we work for you. So it's what you will trade. Anyone you select is what you will trade. You can trade volatilities, you can trade the step indices, you can trade boom and crash, you can trade all the cryptos. If I come here and I pull this place, I can see all the breakdown, all the cryptos. There are so much. Forex majors, Forex minors, step indices, volatility indices, range indices, jump indices, energies, equities, ETFs, metas, stock conversions, and crash and boom. Okay, these are all the assets that you can trade. So this platform is, if you come here, once you have created this, look at this. This is called Kasha. If you click on this Kasha, if you click on Kasha, you can deposit, you can withdraw, you can transfer. Okay, but your Kasha will only work on your real account. It doesn't work on demo account. Okay, it only work on real account. You can see the instruction there. It doesn't work on demo account. So if I go back to my traders hub, if I go back to my traders hub and switch this to real account, if I click on this Kasha, you will see that I can do transaction. In the last 1 week, what I have withdrawn from this account is, let me see. So, so I can go to reports. Okay. Under reports, I can come here. Okay. So here you can see, I just want you to count the withdrawals for me. So let's see, let's go. No, it's meant to be here. Let me see. I think I've done a lot of stuff on top of it, but let me see. I can see it as credits. Okay, let me just scroll it down a little bit also. Okay, so I want you to look at this date. Look at this date. What date is this? This is 19th of July, right? 19th of July. What's today's date? This is 19th of July. I want you to see the withdrawals I've made in 1 week. This is 19th. This is 19th. So the next one. This is 19th. This is 18th. This is when? This is 17th. And let's see this. The last one was 17th, right? So let's see. '13th, 14th. Okay, 14th, 13th. Okay, I think I started from 17th. So between 17th and 19th, I think I withdrew close to, it should be about close to $900. So I know I did, let me see. Let me just add it on my head. I did 150 plus 150 plus 115. 115, yeah. Plus 150 plus 180. 745. So 745 times, let's say 1550. So this is what I did last week. From from this guy. Okay. From this guy here. You can see the money in the account is small, right? Now, between now and end of this week, I'm sure I'll still be able to do that same thing again. I'll still be able to repeat it. Okay. So you don't need to have too much money. You know, it's just a question of being consistent. You are going to have profit, you are going to have loss, but just make sure that your profit is more than your loss. Okay. So back to business. So if let me just switch it to demo for demonstration purpose. So there are different things you can do here, but the one that will give you money really, really fast is this guy, Smart Trader. So if you open Smart Trader, and I want you to, sometimes people will tell me, teach me. The teach me that you should be asking for is this class that we are doing. I cannot teach you tick. I cannot teach you this one. You don't teach somebody this. All you need to do tick is to apply the knowledge you have gained from this your knowledge here. All you need to do is to come and apply it here. Finish. And your ability to be able to see into the past and into the future. So if you have mastered this trading, this whole learning thing that we are doing, if you have mastered it very well, what it will do for you in tick is this. You know, I can come here and change this to candle. It will be showing candle. Okay, now this candle, I can zoom it down so that it will be very small. Right? So when you zoom your candle down like this, it gives you an holistic picture. Okay? Now look at this market. This market just broke a trend line. If you draw a trend line here, let me take line. Here's my line tools. I don't have trend line here. These guys are not serious. So there's no trend line there. But now, what we do in tick is we imagine, we do a lot of imagination. Okay, so if I zoom this thing out a little bit, right? If I zoom it out a little bit here like this, for you to see the candle small, yeah, just small the candle. You will agree with me that this place is a high, right? You agree with me that this place is a high. This place is a low. This place is a low. So there's a high, this is a low. Now this market is in between these two places now, ranging. It has gone close to the high, it has come back to the low. So maybe next is going to do now, it's going to go to the high. But remember, what we are trading is tick. What we are trading is this guy, tick. So it's either you want to leave your chart like this and be seeing the high. Look at this. This is a high, this is a high, this is a high, this is a high, this is a high. Okay, the market has come back and the market has come back to break this high now. Okay, this is a high. The market has broken this high. Okay, this is the last high before the low. The market has broken it. So the most realistic thing for this market to do now is to buy. So yeah, you come here and set tick. For your information, during the week where the forex market is open, you will see all this will be active for you to be able to trade. But I don't trade them. This forex pairs, like now, this forex pairs, because the market has not opened, that's why you are not seeing it. It's not active yet. If the market is open, you will see these Forex pairs here for you to be able to use them to trade. But I don't trade them because they are too erratic. What I trade is synthetic. You just come to click on synthetic, select one of these 5 from volatility 10, 25, 50, 75, and 100. Don't do anything other than these ones. So if you select volatility 100, this is volatility 100. Okay, then you have the option of taking from 1 tick to 10 tick maximum. But me, I normally do 5 tick. You can do 1 tick, it's fine. Just 1 push and you're in the money. But just 1 push to you also lose the money. Okay. Then you select stake, you select $100. Let's say 100. Okay, there's big money in this account. So let me do $1,000. $1,000. Then you come here, select equal.
Sorry. Okay. I wanted to ask a question, right? What's the difference between tick and minutes? You can say 5 minutes, 3 minutes, 2 minutes. So what's the difference between the tick?
You will see the difference now. Don't worry, I'll show you the difference now. Just watch.
Okay, all right. Okay.
So this is tick, right? Now, every trade in tick is 1 second. Every move of the tick is 1 second. So this 5 tick means I want to trade for 5 seconds. Okay. Now, I'm not just going to say, okay, the market is moving, just enter. No, I can still apply indicator to this chart. Now, I'm looking at this chart. This is a high. This is a high. The market break this high and is buying. So the market is still in a buy. So more like the market is trending up. Remember, this is a low. This is a high. This is a higher low. The market is trending up. The market has given us a higher high. So the market is still going up. So since the market is still going up, I want to take only buy trade. So I say buy this market because the market is pushing to the upside. Okay. Now, from when I enter the trade until when the trade get to the last tick, which is the 5th tick, if it's above this line, then I won. Are you seeing it? This contract is won. In 5 seconds, I just made $952 if this were to be a real account. 5 seconds. What will show that you are going to win the trade is your ability to be able to recognize that this market is trending up or down. I can pull it all the way so that you can see full holistic picture. You see that this market is in an uptrend, it's going up. So you can trade only once. If you have money, like maybe you have like $10,000 in your account, you can risk $200 out of $10,000. That would nothing. Even if you lose $200, is nothing. And you can just trade 2 times or 3 times in a day, and you have made like $400 or $500, and you close the case and you go and sleep and wait for the next day. Or if you want to do it as many times you can, no problem. But what that can lead to is that it can lead to multiple losses as well. Okay, so you close this, and then you wait for another opportunity to trade. Just be looking at this thing. Just keep looking at it. This thing and this thing, you see here and here, they are what will determine your entry in the market. Is the market trending up? Is it trending down? If it's trending down, so the same way the market will give you candlestick and it's going up and down, that's the same way this stick is also giving you up and down, but it's looking very small. Okay, so now you wait and see if the market is going to continue to go up or the market is going to come down. The difference between this one and minutes, if I change this to 5 minutes, right? 5 minutes. The difference between the two is that if you are trading in minutes, let me put candlestick so that, candlestick so that you can analyze your chart better. So now the market is actually at a previous resistance. Look at it. It's at the previous resistance. So if you say this market is going to do another 5 candle to the upside, then you take a buy. But if you believe that the market is going to do another 5 candle to the downside, then you take a sell. Okay. What will inform your decision that the market is going to go to the downside? You need to zoom it out and see if I'm going to get a bearish candlestick formation here. Here is a resistance, and the market has given me one rejection candle of that resistance. Let's see if this one will close, if the next candle will close bearish or bullish. So if we have a bearish candlestick formation from the resistance, then we want to sell. Okay? Then we want to sell. So this time when you sell the market, so that's a bearish candlestick, right? So once you sell the market, we say sell, right? It's not tick. Once you click sell, you will come here and click on view so that you can be seeing the way your trade is moving. Now, as your trade is moving, you'll be seeing the profit that you're making here. Look at this, 133.26. As it going, if it's go, this is my entry line. Once it's above the line, this money will be negative. Once it's below the line, this money will be positive. Okay. Now you can decide to close your trade anytime when you are dealing with minutes. But if you are dealing with tick, you cannot close your trade. So if this market goes, now it's 62, now it's 35, now it's minus 33, now it's minus 89, now it's 86, now it's minus 132, now it's minus 178, now it's minus 2 something. Now remember, what I'm risking is 1,000, right? Now I have 5 minutes to wait. At the end of 5 minutes, if this line is above this line, I will be losing. But if this line is below this line at the end of 5 minutes, I will win. But now I can decide to say, okay, this market is not going to favor me. Let me close this market here. I'll just come here and click sell this market. If I sell this market here now, I will lose 370 instead of waiting to lose 1,000. Okay. In the same vein, I can still wait for the market to come below the line. If the market comes below the line when it's positive, I can say sell this market. Are you seeing the difference between the minute and the tick now?
Yes, sir. Yes, sir. Yes, sir.
Okay. So we can wait and see when it comes until, because this thing is going to take 5 minutes. We are just what's the time now? Here's my counter. Here's my time counter. 3 minutes. So I have 2 minutes, 59 seconds to go. Now, within these 2 minutes, 59 seconds, this market can still come down positive and I still win this trade. Okay. Now it has gone to $172 profit. Now, if I'm not very sure that this thing can stay down like this in the next 5 minutes, I'm already making $420 something. I can come here and say sell this market now. Now when I sell it, the market stopped. So it stopped at $485. So I've already, that's my profit. I close it. You see that? When we started just now, this guy was how many? This guy was $13, $13,000. Look at it, it's now $15,000. Are you seeing it? So this is how you can make quick money. You know, see, you can see it's going because this is a bearish candlestick formation and it's coming from a resistance. Now, tell me, is this gambling? Are we doing this thing by gambling? Look at it, it's going on. If I had not closed that trade, my 1,000 would have been short. I don't know if it's making sense to you guys. But you see, if you know how to do this thing, you can make a whole lot of profit in a day, if you so wish. So A lot of people are scared of this thing because they call it gambling. It's not gambling. I'm working with technical information here. I'm not just entering the trade. I know that in economics, this place is supply zone. I know. Why? Because I have the market move all the way to this place and the market move away from it. Anytime the market move away from a resistance, that place is a good, is a key resistance. See this place, now this is also a resistance. The market moved away from it. But when the market came back to this resistance, the market breaks it with a, look at it, it breaks it with a momentum candle. Look at the candle that used to break it. That's why the market was able to pass through. Can you see this, our owner that we just entered now? Look at it, it has done, our 5 minutes must have finished by now because we started from the close of this candle, this one. So we count 1, 2, 3, 4. Look at our 5th candle. This is our market close. Let me put a line there. Let's look at the trade that we traded now. Look at where it closed. It closed here. It closed here. So we enter from here and came and closed here. And see the market is still going down. Guys, is it difficult? Is it difficult to do?
It's not.
I also believe that it's not difficult.
It's not difficult. That shows that the one has to be very close monitoring this process, this system. And
So if you don't want to be doing all those monitoring, you just come and use tick. Change to tick. Okay, when you change to tick, this tick now, this market that came down all this way like this now, I would have taken more than 5 trades and all of them would have favored me. Just these 3 candles that came like this now. If it's tick I was doing. You know, for tick, once you have entered, you cannot change your decision, right? You just have to make sure that your decision is correct. If your decision is not correct, now look at this place now. The market has come back to this resistance. It's pulling back to this resistance now, right? Now, if the market breaks a trend line here, the market is going to buy. So in order for me to see that well, I need to zoom this chart, let it be small so that I can be seeing it very well. I need to zoom this chart small. Okay. So volatility 100. Let's zoom in, zoom in, zoom in, zoom in, zoom in. So you see the long move, this strong move, it's a very strong move to the downside there from here. If you look at it from here, it's a strong move. This strong move is what you are seeing here, like this. Okay. So, but now you see, this is this place where the market is right now. This place is a previous resistance. Okay. So this region like this, the market can still buy from this region, or the market can break it, or the market can come to this support and buy, or break this support and come to this support. So the market will keep going after, so the market will keep going after support and resistances. Support and resistances, okay? So just for you to take a very close look at what you are doing. See that push? Take a very close look at what you are doing. So the market is buying from that. Are you seeing it? Buying from that support. Look at it. Can you see that? If I had taken a buy here, by now I would have been in the money. Okay, and it's still buying. It has even broken that resistance. So let's see. See if it's going to continue. Pull back. Get ready to continue. So let's take a buy. So if it pushes now, it's against us. But that doesn't mean that the first one is against you, mean that you will not win the trade.
It has given double bottom, so it's going to buy.
Boom.
It's
So
going
you
to
see
be a
now,
long buy.
so I bought and I
There
won
is
the
double
trade.
bottom.
So you can see that contract won. So that's another $952. Why is this not real account now? Why are you making me to waste my energy? Hmm? So guys, so for me, everything about this tick is coming from your knowledge of forex trading. I can put indicator here for your information. Okay, let me put indicator so that you can see. It's not just line like that. So I can, even if I change it to candle, even if I change it to candle, I can put indicators. See, this is indicators. So you come here and say exponential moving average 21. Exponential moving average 14. 14. Exponential moving average 7. These are the three that I like using. Okay. 7 and 2. So now, when you see that this moving average are parallel to each other, it tells you if they are parallel and they are facing up, it tells you the market is trending up. If they are parallel and they are facing down, it tells you the market is trending down. Okay, so you can use this as your yardstick to trade. You can also switch this chart from candle to line, and the moving average will still be there. See the moving average, you see the perfect trend up, and I see the perfect trend down. So when the market push back into the moving average, when you return, it tells you that that's continuation, right? Except it breaks the moving average. If it doesn't break the moving average, every of this market that comes back to the moving average gives you a continuation, comes back to the moving average, continue, comes back, continue. So each of those continuation is an opportunity for you to trade and make profits. Are you seeing it? If you want to compress it further, you can compress it further so you can see the big picture. Okay, so in this area, the market trend down. Here the market pull back. Here the market pull back. Here the market trend up. Here the market trend down. Now it's going up again. Okay. So let's see if we can cash a buy. It has gone too much. Let's see if we can cash it from here. Okay. Buy. So that's a buy indication. So let's enter the buy. So it's going up. Let's see. That's it. That's it. Oh, now we lose this one. Okay, so you see contract loss. Now you see the first one, the second one, the third one favored me, but the last two did not favor me. Why? Because the market decided to do like an equal top. Okay, but that doesn't mean that the trend direction has changed. Okay, like it's tick. The market, what you are doing is tick. So the tick are more in one candle. Okay, so now we lost. When you lose your entire 1,000. Okay, but when you profit, you will profit 1,952.66 minus 1,000, which is 950 something. So you see the people that built this system, in either way, they are making profit. So whether you lose, they'll make profit. Whether you profit, they'll make profit. So their system cannot go down. You see that? So guys, I think we can draw the curtain here. We have exceeded our time with 1 hour. 1 additional hour.
Yeah,
Okay.
Yeah,
good
we're
for you.
enjoying the class.
So the market is still
Thank you
trending
very
up.
much.
Now we need to shoot again. Let's shoot for the it has gone already. So sometimes it goes very fast, eh? So you need to be fast. And secondly, for this tick, your internet need to be up and doing. Because your entry might be right, but if your internet is not up and doing, it will not enter when you want it to enter. And then the market will go against you. Meanwhile, your prediction was correct. Your action was correct, but your internet made you to lose the trade. Okay. So you need to make sure that you're using a very good internet. And when it comes to trading business, like Timothy mentioned, you need a very good internet, both for your MetaTrader 4, your MetaTrader 5. Okay. All right. I think we can call it a day. Let's see if we'll catch this set that is going trying to set up. So we say sell the market. Are you seeing that? The first push favor, second push favor, third push favor us, the fourth push, and the fifth push. That's $1,000. Clap for yourself. You can play with it anytime. Okay.
Sorry,
So
just a
guys,
quick one. You said the exponential moving average there is 2, 7, and what you used in the 1 minute.
21, 7, sorry, 21, 14, and 7.
Okay, 21, 14, and 7. Okay, all
That's
right.
what I use. You can also use it for your normal Forex chart. You can go to your Forex chart like this, put those 3 moving average there. Let's see this one. So you come to moving average. Just say, let's use the daily chart. Daily chart, say, MA 21. Let's call it black, make it tick. So go then 14. Oh, this is muted, so let me change it to exponential. Let's do white. Let me change this one to exponential. And then the last one is 7. Let's make it thick as well. All right, make it gold. That color is not very bright. Okay, so you see these 3 moving averages on your chart. They are 21, 14, 7. So you can actually change this your chart to line chart. Okay, and come here instead of this thing, you come here and say line chart. Let's make the line chart which color? Let's make it white or any light green. Okay, let's make it white. Okay, so it's a line chart. Then you come up here and switch it from candle to line. So you see my moving average, and then you see my line chart. You see how this market came, break here, and it's on top of moving averages until now. Okay, this is what we're just doing just now on that tick. You see, this is your price. This is actually your candlestick. If I change it to candlestick here, you see it candlestick. Okay. You see now, you see it faster with the line. The line cross the moving averages. It went up, came back down, go up, came back down, is buying. Okay. So this is exactly the same thing that you are seeing here. That's what you are seeing here now. Now, so if you change this, if I change this chart to 1 minute, okay, and change this, I want to show you a replica of what you are seeing there now. And change this to volatility 100, volatility 100, which is this one, right? Volatility 100. All right. So what you are seeing here now, and what you are seeing here on this one is volatility 100. Okay. Volatility 100. So this and this will not be the same. What you are seeing there and what you are seeing here should not be the same. Let me compress it so that you can see it. So this, look at this chart and come and look at this one. Can you see it? This one and this one. Can you see they are the same?
Yeah.
Let me close this one so that you see it well. Look at it. Let me make this one small so that you can also see it. Oh, you see that push? Oh, I'm on the wrong volatility. That's 100 oneness. This one and this one. Yes. Ooh. Yeah. So this one and this one. You see this eye here? This eye here? Look at it here. Look at it here. That's that high. That's where the market is right now. If you look at it from here, it's here. Okay. So you can actually put indicators even on this one and be looking at this one to trade this one. If you have two screens, you can be looking at that one to trade this one. When I started doing this thing that I normally do, I share my screen into two, put the MetaTrader 4 on one side and put this on one side. But later I have to learn this and master it because I believe that for you to trade this thing very well, you have to master this one and be able to use it to trade. If you're able to use one to trade, then you won't have issue.
Okay.
Okay. Oh, this market want to aggressively break that place. So let's see if it's going to break it. Then we need to buy it to the upside. See, it has broken it. It has broken it with force. Now you see, I put a buy there. So let's see. Oh no, lost. Okay. So sometimes when you do that aggressive break, it's immediately followed by a sell. That's what happened to me now. But that doesn't mean that the market will not still buy. I'll still go and take my buy because I know the overall direction is a buy. Overall direction is a buy, it's not a sell. Okay. Oh no. Okay, so now these two trades that I just took now that I lost, now can you see how bad it is? That from your 16,000, you have dropped to 14,000 with just two trades. So that's why you need to be so when I'm doing this thing, I'm very, very disciplined. Sometimes I will just do I'll just do a few trades and close my trade and place my withdrawal. So the way the withdrawal works is this. You come to cashier, you click on, sorry, let's go to real account. Change to real account. Okay, US dollar. So you come to cashier, you click on withdrawal. When you click on withdrawal, it will tell you to send the mail. When you click on this mail now, okay, it will automatically send the mail to your Gmail, to your whatever mail that you are using, okay, with them. So now I have to go to my email. Go to my email, and I will see the link there. Look at the link, the withdrawal link. Say you requested for a withdrawal. You click on that link and verify that it is you. Then it will now ask you, so how much do you want to withdraw? You now type the amount here. Say $27. That's what I want to withdraw. Let me just use this to do an example for you. Now, whatever payment method you have used, I use online Naira, I use Screen, I use card. Okay. So, and the way this thing works, any payment method you use to fund, you need to withdraw back to that payment method. Okay. So if you fund with card, before you can withdraw to any other payment method, you have to withdraw that equivalent amount you funded with card first. Okay. If you don't withdraw that equivalent amount, they will reject your withdrawal. So if you come to if you see my email, if you go back to my email, for instance, okay. Going back to my email here. So you see, I have a lot of email from Deriv, right? Look at this one, I say payout declined. Look at the reason. Unfortunately, we are unable to process your withdrawal request of this for trace ID this due to the following. Kindly withdraw fund back to card ending this, that. You see, I still have up to 1/6 to withdraw to this card as at this time. Now, if I go back and look for the next decline, let me see the next decline. This one, which one again? Which one again? Oh, this one's out. Okay, this one. Let's see this one. So you see now, I now have 1,018, meaning that from when they declined that first one, I've withdrawn more than 500 from that account. So I have like one left to withdraw. Okay. And of course, when you withdraw, it takes so far, it takes exactly 3 business days from my experience so far. When you place withdrawal on this Deriv, it takes exactly 3 business days for the fund to drop into your account. Okay. Let's see what's wrong with this thing. Okay, so let me see the last one that dropped. The test message. GT Bank. So this one dropped on Friday. You see, if you come like this 150, you see. So that's the way it comes into your account. So you can see it's for real. If you do it where you make money, you withdraw money, it's your money. It's not that person's money. You withdraw the money, it's your own. Okay, and you can use it. So what you need to do is to consolidate on this knowledge. Once you consolidate on the knowledge, you are good to go. Then you can confidently come and say you want to do tick trading. Because the tick trading is actually for expedited income. But that is on the ground that you know what you are doing. Don't go and do tick trading tomorrow and come and call me that you lose your money. You need to make sure that you know what you are doing before you go there. It's high risk. trust me, it's high risk. The risk of trading tick is higher than any other trade you may want to do. Okay. But the beautiful thing that you know what you are doing, the risk will not be visible to you because you can do it, you can make money out of it, and you can withdraw your money. You understand? So thank you so much for your time. We overshoot our time so much. So let's draw the curtain here.
Thank you so much for helping us out.
50% has already logged that already.
Thank you.
Thank you very much. It was a nice one. Thank you very much.
All right.
Thank you. It was fantastic.
Okie dokie. Let's stop recording.